Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at hotspots in the markets for today, Tuesday, June 14th. My name is Todd Rich. I am with Nadex. With me, Brian Caprice from Keep Trading Simple. What are we looking at today? Well, we just had the PPI numbers. They came in, they're still not pretty, but came in slightly better than expected. The producer uh, price index. Really, the markets are just sort of stabilizing around that after yesterday's complete washout. Um, with those numbers coming in a little bit better than expected, right now everyone's sort of waiting to see what's going to happen tomorrow when the Fed does their announcement on interest rates tomorrow afternoon. So really what we're going to be looking at for the rest of the day and even tomorrow is setups going into the Fed announcement. The markets seem to be predicting, people are calling for a 1% rate hike. Uh, they broadcast they were going to do a half a percentage point, but now it appears that they might do 0.75. So we're going to have to wait and see. Tomorrow is going to be an interesting day, and then we'll see how the markets react to it. Right now, we are seeing some volatility in commodities. Gold and silver really got washed out yesterday, but liking the news a little bit, silver is actually popping a bit this morning. We're seeing some volatility in oil as well. The other thing we're going to look at is the cryptocurrencies, Bitcoin and Ethereum. Those ones are down again. So while the rest of the market seems to be stabilizing, cryptocurrency is getting hit a little bit. Equities, liking the news a little bit on the PPI. We have seen a little bit of a bounce. At least it's not a complete, red day. We're seeing a little bit of a bounce. Maybe we can try to claw back some of yesterday. What I do want to remind everyone is that we're going to be doing a full-blown session in just over 3 hours. So after the open, once retail traders have gotten in, so if you haven't registered, I just dropped the link in. Please register. Join in 3 hours. If you can't register, at least you'll get access to the recording. But Brian will be going through all of the markets, taking a look at charts for all of them, and talking about how to potentially get set up for not just the rest of the day, but particularly
Tomorrow.
tomorrow. That's going to be really important. That might be a very helpful, useful session to know what you might be looking for in each one of the markets when the number comes out tomorrow. All right, before we jump into it for today, at least for this morning, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. In here we can see crude oil once again popping up above 122, and gold. I was looking at gold. Yeah, gold's. It got hammered, hammered, hammered. It's still trying. It's trying to. Nope, it's not. I mean, I know gold's really struggling. In any case, Brian, let me flip it over to you and let's do a little bit of analysis for this morning with the commodities and cryptos and the equity markets for sure.
Sure.
And then we'll have everyone come back in 3 hours and
Yeah.
10 minutes, 11 minutes, and get a full rundown on
Yeah.
how the
I
markets
mean,
have digested PPI.
yeah. So PPI is an interesting one this morning. And again, Todd and I talked about this. I don't know what the original forecast was supposed to be, and I don't know if they've actually changed the forecast. A lot of times when they have a number that has something to do with it, they will make revisions. And again, the forecast can change. We see with oil all the time where there'll be slight revisions in the oil forecast for news. Because again, technically nobody knows, even though there are people that know. I don't know if they adjusted the forecast after the CPI number, but they did come in kind of in line with where they are. Again, after yesterday's, like as Todd said, it's a complete washout. We are kind of halting right now, which is very, very common for two reasons. One, after everybody was shorting yesterday, they're kind of taking their profits and they're kind of holding and stabilizing, and bottoms are put in. They're also preparing for tomorrow because tomorrow is where the actual raise is coming in. Now, there's all kinds of talk now about what the Fed is going to do. Goldman now has joined the 75. It's funny. Goldman joins the 75 basis point hike bandwagon. First it was J.P. Morgan. Now Goldman has fallen in line, and a couple other, Wall Street Journal. They call this guy the Fed whisperer. He is also saying that they're expecting 0.75. Now, what's interesting about this is it's kind of a no-win situation for the Fed. If they do 0.75, it shows that what they had was not working. Again, they failed on the transitory, front of it. The other side of the equation is they're going to 0.75 after they've telegraphed and said we're going to do 0.5, and we're holding firm to that. So if they don't do anything, the markets are going to absolutely go insane. It's going to be like that scene from The Wolf of Wall Street where like he decides that I'm not quitting, forget them, and that the office erupts. That's what the market's going to do tomorrow. If they do 0.75, that's kind of what the expectation is now because again, what they've what they've done has failed. And a lot of people are saying if they do 0.75, the market is daring them. That the market wants 0.75. They mentioned in here that this is the only way the deterioration in the labor force, absent a recession, would be too slow to resolve the inflation problem in the near term. Right? It says if they do 0.75, this will bring the Feds on the brink and risks sparking a recession, which of course is not a risk because it's precisely what they're aiming at right now. So
right, we kind of almost we need it.
yeah, so it's and it's strange. And they said the market is daring them to do the 1.0, although a lot of people don't think that basically that they don't have the guts to actually do the one, even though that's what they needed to do. And again, we look back, Bullard was saying we need to go strong from the beginning, and Powell's like, we're going to go strong from the beginning. So if they accelerate, again, they're showing that they don't have a grasp on this. They've been trying to react and manage it instead of proactively kind of dealing with it. And they said this is not a Russia problem. This is solely a 2021 problem before Russia even invaded. That we've been allowing this to build up. And instead of saying, hey, eventually, guys, we're going to have to do this. We probably need to do this sooner rather than later. Remember last September, Bostic's like, yeah, we should end that. And it's good. But never mind. We're not going to do anything right now. Right. Again, if we had started this process back in September of last year, we may have been in a lot better situation. So it is going to be a big day tomorrow. And again, we start off with retail sales, which is a top 5. I'd say even top 3. Retail sales is what has been showing us that the economy is good, right? People are spending money. Well,
let's see if they continue to.
That is
right.
The forecast was originally, last time it was a 0.9. Now the retail sales expectation month over month is a 0.1. So we already know that habits are changing. Target said it. Walmart has said it. Amazon has said it. Dollar Tree has already said it. Dollar General has said it in their earnings. So we're seeing this number absolutely without a doubt change. Which one of these sparks is going to be what catches the recession? So we mentioned it yesterday. Todd said it. We are close. We're officially now in a bear market. With the close of yesterday, we are now officially in a bear market. All good things coming to an end, and again, it's just a natural cycle. But it's a big deal. And Todd talked about what's rallying today. Talked about gold. Oil has obviously been a problem child for everybody. We all know this is a problem. We're at 22.50 right now. There was some news a little while ago, and an interesting response to it. At 8:00 this morning, we actually got word that Biden has actually now confirmed that he's going to Saudi Arabia, but not for a month. So the market was like, oh, okay, great. So it's up $1.40 since this release. It's great that he's going over there to try to increase our supply. But it's not for a month from now. And then how many months will it be until they can actually bring that additional supply to market? I don't know. Oil's response was a drive higher. And I think today, again, with the numbers, producers being like, yeah, it's not as bad, right? If it's a positive day, meaning that maybe we're it's working a little bit. I mean, if they're trying to put a positive spin on it, oil doesn't have any reason to really kind of turn to the negative today. So I would say that oil, I really don't want to test the 23 level again, or even this level up here, the 22.50 where we're at today. But again, we tend to see more bullish activity in the U.S. session. We're kind of getting there now. We've been rallying since we got the news that maybe there's something coming in 2 or 3 months. So gold and oil, obviously big ones. Gold and silver. They've really more or less bottomed out yesterday because it's, everybody knows what's coming. I would say that this is probably a temporary halt, particularly in gold. I mean, now we have tops and bottoms put in. I would say for gold today, if you're looking for tops, probably around the 1829-ish level. 1830 level is probably going to be where the top is. Again, we have confirmed sellers in there. Actually, let me run fibs. That may even be a 23. Yes, it's kind of hiding right around that 23 level. It's right above it. If you don't take the spike, the actual kind of drop here, not the spike, the 23 is literally bisecting that level at the 23. The 23.6 is going right through that 1830. So silver, mentioned yesterday, hey, listen, 21, we'll hit 21 this week. And again, yesterday it changed it. It's no longer Uncle Warren, it's Uncle Jamie. We ended up right after we talked right here, and I said, hey, listen, we're going to probably hit 21 this week. At some point. And literally we dropped down in an hour, we hit 21 and then bounce. And we're also doing the kind of same sideways movement silver. And again, running this down, it's a little bit off where the 23.6 level now, but we do know that we have sellers coming in just slightly above. And I would say that be cautious with silver. Silver is also getting a little bit of help from Australia, but we're hearing that Australia is like, yeah, we met with China, but we're not talking about a reset. It's premature to mention that. So it doesn't seem like Australia is thrilled. Australia also is talking about doing a surprise 50% hike, or 50-point hike, not 50%, 50-point hike. So that's going to add some kind of, I would say, kind of fuel to the fire as well. That was coming down here about, Australia is starting to get more aggressive right here 8 hours ago. Delivered an unexpected 50 basis point hike. Looks like they're really starting to get on the offensive with, this. And again, they know where it's going. They're talking about how recession is not imminent. I hate that word. Imminent. I hate that word. It's just one of those words for me. Australia's also starting to get more aggressive. So everybody's doing it right now. The one weakness out there in the market that is glaring right now is the pound. The pound dollar is down, as well as the pound yen is down. And the euro pound is up 76, which is quite a lot for that pair. I think that's one that we need to point out today. It is surging. I mean, it is getting up there. We had talked about levels on a higher time frame, right around 86.69. We're kind of pushing right into that level right now, and this is a lot more movement, really from the 2 o'clock time period on. I mean, you can see it. I mean, that's 113 pips. The daily ATR for this pair is only 67, so we're a lot beyond what the norm is for this pair. I would say look for potential reversals. Not that the European Union is in a great position, but again, the pound is already in the recession. That's why this is having so much weakness. If we start to go, Europe is probably close behind this as well. I would say be looking for short opportunities in euro pound, just as the pound kind of replays back again. The indices right now are all kind of paused. The VIX is down. It's funny. This is what the chart looks like. We're like the VIX is down. No, it's down from the close. Yeah, it's down from the close, and the PPI data is out. But the day that we have coming tomorrow, I mean, here's tomorrow. I mean, it's packed full of news. I mean, the retail sales at 8:30 in the morning. Then we have all the FOMC. Then we have the press conference. And then actually tomorrow night, bam, we slide right into Australia with even more blockbuster news, right? Unemployment rate dropping down, employment rate. So it's a big day tomorrow. The news is out today, but I wouldn't be, again, more and more people now get their name out there are going to be talking about 0.75, 0.75, 0.75. And if we do that, a recession. So I would say that all the ingredients are there.
That's probably what we need. We got to break the price cycle. So
yeah.
The question is, and this is what I know a lot of people are talking about, is recession. Which is worse, recession or stagflation? Where
I don't know. I feel like I would be okay with the stagflation part because that means the prices of things are going down. I don't know. Typically,
stagflation would be prices continue to go up, but you get but you've got a shrinking economy.
Yeah, the GDP is shrinking, but it goes backwards. But stagflation means you're going backwards in it as well. So at least that does it.
Right.
Halting inflation. Like if they stop inflation now, like they talk about going to neutral. If we go to neutral now, that means all the prices we have now, we're in. They're here. They're locked in, guys. We have to go backwards. We have to hurt. Again, this is the way the currencies raise and lower interest rates. We need to lower our prices. Is kind of what we need.
People
can't survive with the current price.
See some. I mean that's. I'm just kind of curious because Target's at the front end of that, who just slash their prices on everything to dump their inventory. So everyone's got a different way of attacking it. So we'll see where it ultimately ends up going. But history never repeats itself, but it usually rhymes. So I don't know. We'll see what happens. Hopefully we don't repeat the 70s.
Yeah. I was born in 76. I don't remember the 70s. I heard they were cool, but disco, lots of open shirts with like lots of, I don't know, maybe. I mean, indices today I think are going to be pretty. Yeah, right. I actually know a guy that was into that. He had the big collared shirts that Italian guy. So he had all
polyester.
Like, the hair.
Yeah, this is imported polyester.
Yeah, it's important, right? So all the indices today, they are technically in the green. Are they surging? No, they kind of look like a lot of the other charts where they're kind of pulled back again. There are some levels in here. There's a 23.6 level that's sitting right up here from kind of where we touched. Yesterday, we mentioned getting down to 37.31. I missed it by a little tiny bit. We made it to 31.35, so I missed it by 2. I apologize for that. That's kind of where we closed. But again, drawing that off of that zone, that was kind of the bottom. Right now, there is a level up, and there has been some kind of touches right off of it, and it is right around the 23.6. So I'd say if we get negative today, It looks like 38.25 is going to be that magic, or 38.23 ish. 38.25 ish is actually where the 23.6 comes in there. 38.35. So I'd say approximately in that range is where, if we do rally up, there could be some selling coming back in. I don't know that today we're going to have the big blockbuster day. Like yesterday was just an absolute collapse. We had multiple different Harry Potter opportunities in there with trend continuations. Um, I don't think we're going to have as much today because it's going to be in preparation for tomorrow. Unless Pat says, yeah, we're 50-50 on that 75 to 50.
And maybe the
If
markets will
Powell
react a
comes
little
out,
sooner. Yeah.
yeah, they'll be like, oh God, they're doing 75. Because remember, Powell made a comment that 75 was not even under discussion before. CNBC was actually talking about that yesterday. That like Powell did that interview and he said, no, we're not even discussing 0.75 for anything. But I give them credit, that the broadcasters were like, he said it's off the table, never. And the guy that they actually did the interview with for CNBC says, no, he said it hadn't been discussed yet, but things have
Yeah.
changed now. It may have been discussed now. So and I don't remember the guy's name, but props to him for actually kind of clarifying that
Yeah.
versus
They
taking the
called out.
headline and
They
twisting it
did
and running it.
say he
Yeah,
did say that they're prepared. I mean, nothing's never. That
right.
they would have
Yeah,
to take a look at the data. So,
yeah,
looking at the data, they might
yep,
give us that 0.75, which could be a good thing because
yep.
it's we need a little bit more of the medicine
Yeah.
to
And the
cool this
question
engine down.
is it price? And the big question is not whether they're going to get 0.5 or 0.75, is which one is the market pricing in? If the market's already priced in 0.75 and it turns out that it's only 0.5, that's going to be a big miss in the market tomorrow. So tomorrow is the day. The market, I don't think, really knows. It's like, is it going to be 0.5? Is it going to be 0.75? But
No one knows,
it's
right?
kind of baked in, and that may be why we have the halt right now in the market, because they're saying, hey, listen, we're kind of factoring that 0.75. That's what we want. That's what we need. We can justify that. But the question is, if we only get a 0.5 tomorrow, does the market skyrocket? Does the market throw a hissy fit and be like, this is ridiculous? We're in so much more trouble. And does it go down? I mean, there could be a lot of movement. So a lot of the positioning today is, again, what's going to matter. And 12 o'clock today, we'll be able to jump in and really kind of say, okay, what did the opening print do today? Because again, PPI will affect that. Retail traders haven't traded it yet. But where do we start pushing? And again, are we going to continue to break lower? Is that going to be the name of the game today? If so, we got to find the new 23 pullbacks. And again, NASDAQ, same thing. Again, we had a Harry Potter trade. It blew through. We talked about the target. I missed the just a tiny bit. YM also did the same thing. This one, fortunately, didn't come back up. But I mentioned 30,400 yesterday. Nailed this one to the dime. Actually, it came down to 30,344 as a target, and then now has stabilized. And it looks very similar, kind of going in a sideways pattern. And Russell's the same bit, right? Russell had a Harry Potter pattern. Boom, 930 yesterday. I mean, literally pulled right up at the open. We talked about looking at beforehand. Pulled up at the open, grabbed the basing level, and bam, has dropped lower. So this is another one. Whenever we mention this, I don't know if it's Uncle Warren or Uncle Jamie, but they're helping us on this one. So I would say drop it down to your 15s. Look in the next 30 minutes. Look to see where we push. But the biggest thing is look to see where we're at 9:30. Look to see where the trend is, and then 10:30 this morning is going to be extremely important to kind of see where will the reversals be and where will we kind of trend out for the rest of the day. Now we can't prepare for a headline again. If Powell says 0.75 is the probable for tomorrow, but we'll let you know tomorrow. It's in. And again, any other type of news, but there's no way to prepare for that. Just kind of look at it. And again, stop back at 12 today. We'll have a little bit more data
Yeah.
as far as where the initial drive is today. And now, okay, let's get ready for tomorrow. And what do we got to do for tomorrow morning? Because tomorrow's big.
Yep. And that's what I would really encourage everyone to do is definitely come and join. And if you can't join
Ernest
today,
is calling for
yeah,
one.
he's calling for one. We've got a stake in the sand, everyone. There's a vote for a full
Ernest is in for one.
a
Yep.
full percentage point. That's pretty funny.
Yeah. I mean, yesterday,
Do I
that's
have a
what they were
two?
saying.
Do I have a two?
The
Anyone
person
want
was saying the market is daring them to do one. The market wants one. The market would be happy with one. It's crazy when you say that. But here's the problem with one. I don't disagree with one. I thought we should have started with one. That's I was on the Blurred camp. If we do get one, what the heck are the mortgage rates going to do?
Yeah. Well, the
That's
mortgage rates are
craziness.
already there. And by the way, again, I'm just going to, I've been saying this for a very long time, and I locked in at a 30-year rate at some crazy, I don't know, I'm 3%, less than 3%. I mean, and they were
2.85.
giving it away. I got an interest rate for less than 3% for 30 years, and I was scratching my head. My first mortgage was a 723 balloon, and it was like 12.25%. So,
Right.
now that was crazy. 2-3% is equally crazy. So you have to realize they're extreme ends of crazy, both of them. And
Yep.
everyone thought it was going to stay down there for forever. Somewhere in the 6, 7, 8% is probably,
But
and I
we're
think
we're yeah, we're right at the 5.8 mark now with a point 0.5 factored in. If everybody assumes 0.75, can we get up to 6.25? Probably. If we do a one,
that's
if
the
we go
range
even
that
higher,
mortgages are in. It's gonna sometimes go higher,
not
sometimes go
not
lower, but
yeah,
the
not
average,
in not in my time, not my home buying lifetime. So that is considered
uh,
extremely high. Any millennials and people that are out now,
there we go.
millennial
Gen
generation
X
is
is gonna
saying they're like, "We're not
tell
buying
you
homes. Forget
where
this
it's
thing. I don't
at.
want homes. Who wants a home? Forget this." Yeah, I mean, again, my generation
Yeah.
had two crashes. We got tech bubble, housing bubble. This is the first, and there's been a lot of articles about this. Millennials, now that they are out, now that they are working, now that they're in the 30s, and those buying years, this is their first financial crisis, and it's how are they going to handle this type of financial crisis, this
Yeah.
level of recession? Did they overspend? Did they take advantage of that? A lot of them focused on career first, and now they're looking for homes. But it's like, who wants to buy a home now? They're super expensive. We'll wait till it comes back down because
Well,
in our
what'll
lifetime
happen
we're
is
used to 3%. So
prices will adjust to make an accommodation for that. So that's just how it
yeah,
works.
we'll
That's
see.
just how it works.
So,
All right.
but
Listen, we went. I didn't want to go that long today because we got the full blown session in 3 hours. So with that, any questions for Nadex, please email us customerservice@nadex.com. Questions about your account, about our markets, about our products, please. We're here to help. The only way we can help, reach out to us, customerservice@nadex.com. Brian and I are also accessible. If you got questions for Brian, please email him, support@keeptradingsimple.com. You've got comments on what we're doing here or what you'd like to see more or less of, or whether you like it or whether you'd like to see us do something a little different, please email me, todd.rich@nadex.com. Brian and I do answer our own emails. Uh, I'm not going to go over everything today. Really, we're just kind of in pause mode at the moment. We had those PPI numbers come out. They were slightly better than anticipated. But ultimately, everything now is what everyone is focusing on is tomorrow afternoon with the Fed. They've already broadcast and said they were going to do 50 basis points, a half a percentage point increase. The question is do they do more based upon what's been going on in the markets and the data they've been seeing? And then what do they say about positioning for next month? Because we don't just have June, we also have July right on the heels. So we're going to get a little bit more clarity on what the Fed is going to do to try to calm down the inflation and to bring inflation back into line. Please join. Um, please join in 2 hours and 50 minutes. If you can't join, do register. I dropped the link in there. At least then you'll get access to the recording. And then Brian and I will be back tomorrow morning and we will kind of go through this again with the last chance before the Fed announces tomorrow afternoon. So until we catch you next, good luck in the markets, everyone. And thank you so much for joining us.